If you are watching this, you have likely blown an account, lost a significant amount of money, and joined the 95% of day traders who consistently operate at a loss. That happens when you let emotional reactions dictate your trades. You look at the charts, you see a massive spike in price, and panic sets in. You enter a position with zero analysis, driven entirely by a fear of missing out. You want to make a quick profit, but the price reverses, and you hold on, hoping it comes back to break even. Eventually, it wipes you out. The way out of this cycle is to build a rules-based trading checklist. This is a literal physical barrier designed to sit between your emotional impulses and your execution on the keyboard. Before we go any further, get a pen and a piece of paper. You will also need to open an active demo account. We are going to build this system right now. By writing these rules down, you take the vague, stressful psychology of trading and replace it with a concrete, systematic defense against your own worst habits. Step 1. Write down entry rules at the top of your paper. Underneath it, draw 3 empty checkboxes. You now require 3 specific technical triggers to enter any trade. We call overlapping triggers confluences. First, we only short if the price crosses below the 21 simple moving average. Second, we check our momentum indicator for strong bearish momentum. Finally, confluence 3 requires a bearish engulfing doji to form directly at our intersection. If you look at the chart and you only see 2 of these confluences, you keep your hands off the mouse. You do not execute. Treating your entry points as an absolute checklist stops you from FOMO buying. Every time you click sell or buy, it is a strategic execution backed by data, rather than a wild gamble. Step 2. Write risk to reward on your paper. From this point forward, a predefined stop loss and take profit are mandatory for every execution. Setting tight stop losses is dangerous. Normal fluctuations will stop you out before the price moves your way. Instead, use a 1-to-4 ratio. For every 1% risked, target a 4% profit. Mathematically, you can suffer 4 consecutive losses, win 1 trade, and break even. You need to start picturing your trading like a rigid computer program. It operates purely on if-then logic. If the parameters are met, then the trade executes. By hard-coding your risk management before you enter a position, you remove the mid-trade anxiety. The absolute worst-case scenario is already mathematically accounted for, so there is no reason to sweat. Step 3. Add a My Assets section to your checklist. You are going to pick 2, maybe 3 specific pairs or indices, and you will ignore everything else. The tendency for most people who sit at a computer all day is to open 57 trades across crypto, indices, and forex pairs at the exact same time. It completely breaks apart your focus. Screen clutter leads directly to execution errors. It is incredibly easy to do deep analysis on USD CAD, pull up your trading terminal, and accidentally execute the trade on a completely different asset because you are watching too many things at once. Simplify your strategy. Delete the excess indicators, clear out the unnecessary lines on your charts, and focus exclusively on the shortlist you just wrote down. Narrowing your scope protects your attention span. It ensures you have the bandwidth to properly run your checklist without making careless, avoidable errors. Step 4. At the very bottom of your checklist, write the words Abort Protocol in large, bold letters. This is your emergency brake. You trigger this protocol if you experience a major monetary loss, if you start feeling angry at the market, or if you sit down at your desk in a highly anxious mood. The protocol requires one physical action. You slam your laptop shut, and you immediately walk away from your desk. Do not try to get your money back. The market actively looks for and capitalizes on emotional traders trying to quickly win back a couple $1,000s. Forcing yourself to physically disconnect from the screens stops a minor temporary loss from snowballing into a catastrophic account-destroying day. Now, take that completed piece of paper and place it directly next to your computer mouse. Your assignment is to trade on a zero-risk demo account for an entire month, and you are only allowed to execute trades that pass every single step on that physical piece of paper. After a month of doing this, you will notice a distinct psychological shift. You will go from sweating over every tick of the candle to calmly checking your parameters, executing the trade, and walking away to grab a coffee. Strictly utilizing this checklist turns day trading from an emotional gamble into a highly profitable, repeatable process. If this system helped you rethink your trading, leave a like and subscribe for more strategies. I'll see you in the next one.